It seems as though market makers are getting the short end of the stick. Word on the street says that these market making firms that provide liquidity to all the crypto exchanges, mainly centralized ones, are actually missing out on profits. They're having to increase their costs, and some exchanges ain't liking that. And of course, the slowdown in volume of Bitcoin and Ethereum being traded across the board is not looking good for them. Did we ever think that the market makers could be missing out on money? Come on. Now you're probably wondering, what is this on my shoulder? Well, we bring the fire continuously, and I work out and get a sweat on. So the crypto towel, right here, ladies and gentlemen, just in case we need it. Welcome to today's live stream. We're bringing it back to the markets. The US session is going to be on its way very shortly in the next 30 minutes. So we're going to be getting ready for some fire in the charts. Bitcoin might move up, Bitcoin might move down, but the NASDAQ itself is starting to bring some flavor across the board. Remember, whenever the US comes back from a holiday, the markets tend to just react to whatever news has hit the weekend, and of course news that hit yesterday. Everyone's going to start finding their feet, so that's why we always got to sit tight and wait for them to absorb everything, and then we get the party started off and start trading during the best time possible, in my opinion, is when the Brinks box finalizes, which is 3 p.m. UK time, 10 a.m. Eastern Standard. So, ladies and gentlemen, it's been a mad weekend for me. I've been sorting out the new website, that's all getting done and dusted, trying to get it all working and everything. But so far, so good. It's doing okay. Mad props to Mr. Dutch and Carlo for sorting everything out, and everyone else that's helping behind the scenes. Mad love to you all. But man, it's madness. Let's get with the flavor, man. All right, then, where we at? Look, it's already started off with a boomer moment, ladies and gentlemen. What's going on here? Anyways, let's get rid of this towel. We don't really need the towel just yet. Let's put this here. Happy days. So what we got Bitcoin right now on the 1 hour time frame. But firstly, we need to go over to the daily open and have a look at where we are right there. So if you remember yesterday's live stream, we were just talking about the idea of you really need to stop caring about what the story is, whether you believe Bitcoin should be higher or whether it should be lower. And we just need to focus on the factors that remain. The marketplace is a little bit on edge. The main theme right now for the marketplace is China. The main theme is the robust work environment, but we're starting to see a little bit of a contraction in that, which is good news for the Fed. Okay? And we've also got the idea of whether or not the Federal Reserve is going to keep interest rates up for a higher period of time, which is naturally going to affect the stock market because tech stocks like NVIDIA, Microsoft, Google, they are prone to the interest rate increases as well as the decreases as well. So that's really important for us to factor in. Now, you're starting your market day or your trading day or even your investing week, and you're trying to work out what the story is moving forward, okay? The best thing for you to do, guys, is to have a look at what the news is doing to the marketplace. Now, there's two types of news. There's the speculative news, and that means articles that come out about what's going on in Russia, Ukraine, oil, gold, all of this stuff that could impact foreign exchange, the stock market, the government bonds, and you name it, all right? Then you've got static news, is what I like to call it, where it's literally statistics talking about the economy. Investors are going to be preparing for something, and then once the news comes out, they'll have an initial reaction. Like today, we have the ISM manufacturing. What day is it today? Is it Tuesday? Yeah, today's Tuesday. Sorry. Tomorrow we have the ISM manufacturing index coming out for the United States. If there is a reading below 52.5 going into the 50s, then that will mean that the manufacturing sector right there is contracting. If it stays above 50, it means it's expanding and it's working as normal. Now, we really need to understand if the Fed has pushed the markets, or should I say, squeezed the money supply so much in terms of interest rate increases to understand where is money going to end up? Well, check this out. Look at this. Goldman Sachs has just cut the idea of a recession chances to 15% on the idea of improved inflation. Now, the first second they hear about the labor market coming down, they think happy days. That's it. It's all good. But Michael Burry back in the day did say that inflation is going to drop, then it's going to spike back up. And the only leading thing that is going to lead inflation back up is the robust jobs market. Now, we are seeing the jobs market starting to slow down. We need to see more unemployment claims. So if you go back into last week's data, you can see that there was a reduction in the amount of jobs being offered. More people were claiming benefits. So that's good news for the Federal Reserve. So now we can step to the next aspect of the marketplace and say to ourselves, right, if the labor market's starting to slow down, we can now start looking at the idea of potentially reducing the interest rates. But I don't think we're there. I don't think we're there just yet for them to get ready to drop their interest rates. Maybe hold the interest rates, but not necessarily drop them, because then that will lead us to a Fed pivot. And we know what Fed pivots are like. Fed pivots do bring the flavor, and the market changes aggressively to that, because when the Federal Reserve changes its stance on its fiscal policy, which means if it's going to decide to increase interest rates or decrease interest rates, that means foreign investors are going to start taking their money out of high interest rate return assets or yields and then go elsewhere. Right now, we can see that the dollar dominance is starting to do really well. It's up 0.5%. And look at that bad boy. It's on a trend. Projected out the 104 zone, we're on our way towards that, marginally missing that bad boy. We're looking left and we can determine that how likely is dollar getting ready to move up even more. We look left and we can see we got this problem all the way up here, which says to us the 110 zone. Is it a possibility for that to be the case? China no longer is the bigger economy. US is the one that's killing it because China is slowing down. And we're waiting for them to effectively resolve this matter with the property development fund, is it Countryside Gardens, to effectively get some funding, because they've got debt that they need to repay. And if they're not repaying those debts, that's going to be a problem for China overall. There's too much money tied up in that fund, that property development fund, and they're missing payments. They haven't been making payments since 2021, okay? And they only opened up their trading on the stock market in China, and it slumped like nearly 50, 60%, 2 billion wiped off the value of that stock. It's not looking good for them. So again, the US is going to come up victorious and be like, yo, we are the ones that command. If you want to make money, you get your money into the dollar. And that's exactly what is going on right now. Dollar is slowly climbing up. We have a break of the 105 zone. That means that people are favoring dollar over assets paired against the dollar, which means Bitcoin doesn't stand a chance. Sorry. It doesn't stand a chance if people ain't exposing their capital to assets against the dollar, like euro, like pound, like Aussie. That's where it's all going. Now, the main theme of what we're talking about today on the market makers losing money is right here. Check this out. Crypto market making profit margins sink 30% in a wake-up call. Well, you never thought the market maker would lose a penny or two. The article goes on to say that there's now more of a risk for them to allow market making facilities for the retail trader. The $2 trillion crypto wipeout has, of course, encouraged investors to say, no, thank you. I don't like those things. They're not interested. And I'm sorry, that's the sad truth. The only thing that's going to get cryptocurrency back, and the only thing that will get cryptocurrency to have the new money coming in, is the ETF. Now, the ETF has not necessarily been declined. It's just taking a little while for it to get fulfilled. We're waiting for the approval. We've got BlackRock backing, Fidelity, Coinbase, everyone, Grayscale. It's all screaming to get this game on the move. The only thing that's preventing cryptocurrency from really succeeding, in my opinion, is legislation. They need the regulation behind it. The ETF gives us the step forward for that, okay? That's the thing that's on my mind. Now, we've got a Bitcoin halving coming up. Cool. 240 days for the SEC to decide as to whether or not they approve or disapprove of the ETF. So if the SEC is going to take their time and use up all of that 240 days, would that marry up towards the halving? What a perfect time for Bitcoin to move. So in other words, it's all about your scope. You can think Bitcoin long term and say, in 5 years' time, I believe Bitcoin is going to go to 250,000. We believe Bitcoin's going to go up and up and up. Even the $1 million Bitcoin, fine, I'm cool with that. We're sat at 27. No, we're sat at $25,500. I ain't interested in a 40K Bitcoin given the circumstances. Volume is light across the board. People need a reason to step into crypto, and they ain't stepping into cryptocurrency. The ETF is going to be the same reason. Human nature doesn't change, and history will repeat itself, because the last time someone stepped into cryptocurrency was Elon when he brought a bag load of Bitcoin, or should I say Tesla decided to pick it all up. Then that started the big old bull move, when really what was going on was market makers were taking advantage of the fact that they were able to give and supply liquidity for people to trade cryptocurrency, and they were smacking up their margins and earning a penny or two. So what was the real reason for Bitcoin to move up? Was it Tesla, or was it the fact that market makers were in a position to offer people the ability to trade, give the liquidity to have access to trade, high leverage, and many people doing it at the same time, which is where they started to make their money, because back in the day, it was a very profitable outcome for them. But going into it all, the crash, FTX, lots of coins, not trading anymore. This is what this article goes on to say. Here are the list of liquidity providers for people who are like, nah, man, market makers don't exist. Let me take you on a little bit of a story. Here's the first company, Horus. Ensure the value of your token reflects the value of your work. Great ethos. Loving the philosophy right there. The Horus advantage. Guaranteed liquidity. Technological approach. Transparency. Alignment of objective. Me as a supplier of liquidity, well, I got a bag load of venture capitalists behind me saying, let's put our money into something. We're going to come to these guys and say, yo, what can we do here? These guys will walk us through. You've got this company right here, GSR, crypto market making. Market makers play an important role in increasing the accessibility and liquidity of cryptocurrencies to traders. Read that again if you don't think the market makers exist and you think about the efficiency of the marketplace. Bullshit. There's no such thing as efficiency. It's their efficiency. What works for them? We're just going to be sitting on the coattails, ladies and gentlemen, holding on whilst they're making moves to the upside on the backs of the retail, believing that Bitcoin's moving up to the upside. We're going to be the guys that are going to be selling alongside these players by the utility of the hybrid system. Giving you an understanding of the impact of these guys, you can see robust liquidity, spread, and order book, 60+ exchange integrations. You scroll down and have a look at all sorts of what they're doing. A guide to market making for crypto startups. These are the guys where you hear about a new exchange. Get involved in this new exchange and you get a deposit bonus of X amount because the market makers is the one that's giving them the bonus. That's the game. Ventures, look at this. Partner with Wintermute in your growth journey. They sell it so bloody well. Look at all these. Econia, Zeta, DFlow, Vaults, Vertex, Zerion, Hashflow, decentralized trading platforms. And they're even going on to saying that they want to come away from centralized platforms. Good news for cryptocurrency. They want to focus on decentralized platforms, not centralized platforms. But you can see that these guys, they are the backwork of the cryptocurrency trading system. Not so much the blockchain, but the trading world of cryptocurrency. Again, we've got the idea in this article, keeps on going on to explain that derivatives and spot is down. Look at this. Crypto shrinks. Spot and derivatives, digital asset trading, volumes have both plunged. Look at where we are right now. It's not looking good. All right? And it says down below, we scroll, it does say, and I don't want to piss on anyone's fire. 2 seconds. Thank you very much. Bringing you that flavor already, man. Apparently, it's going to be difficult to expect a new crypto summer anytime soon, right? Oh, no. Oh, how unfortunate for us. You can see it as a negative thing. You can call me a perma bull, perma bear. I don't care. All right? I'm here to get you guys to understand it's about the movement. Forget the price. Some of you that will be doing DCA will be saying, well, Tino, I need to be aware of the price because I need to know my average of entry and price so I can work out my return. Listen, we're not there yet until we do clear a significant zone, which is going to spark interest. Bitcoin, can you get above 31,800? Cool, you get above that bad boy. Then we're going to have a conversation about maybe looking at the previous vector candles all the way up here where market maker previously bought. He bought into the retail trader. Did I get that right? Yes. We're not there, okay? And as long as Bitcoin has low trading volume, it's going to be hard to make us understand how likely or how soon will Bitcoin move up. The only thing that's going to make Bitcoin go up is the ETF. So they're kind of giving us an idea that maybe in the future, the only way that cryptocurrency can thrive is if we introduce a financial asset that allows people to see things from a familiaristic point of view. We have ETFs across the board for everything. Well, if an investor says, oh, there's a crypto ETF or a Bitcoin ETF, okay, cool. So what happens there? Well, you invest in the ETF, add that to your portfolio. Fine. Do I buy Bitcoin? No. Don't worry about that. You're not physically going into buying in an exchange. You don't need no wallet. This is the ETF. Okay, cool. I'm cool with that. Has it got governance? Yes, it does have governance. It's been endorsed by BlackRock. This is their ETF. Well, I'm going with BlackRock. They seem to know what they're doing with a $9 trillion fund managing that amount of assets. My days. Familiarity. Getting things familiar. That's what we need in cryptocurrency. People need to be familiar with it. Only 4% of the world is involved in the game of cryptocurrency, and that's the sad truth. So now we look at the chart and say, how likely is Bitcoin going to go to 100K? Well, let's look at it like this. Sorry. Think of it in this term, right? If Bitcoin is following the NASDAQ and the S&P, then naturally I'm going to be paying attention to the NASDAQ and the S&P. I'm going to be paying attention to conviction behind investors in Tesla. Why? Tesla has a bit of a preference. Tesla has interest in cryptocurrency because it has done in the past. There must be a reason for it to step in again at some stage. Although SpaceX did get rid of their crypto holdings, forget that. We need to understand this was a company that had invested in cryptocurrency before. We go into NVIDIA, okay, which in essence, tech stock like cryptocurrency, it's $1 trillion market cap. It's going to naturally make us believe that if this bad boy keeps on moving up, the stock market keeps on going up, naturally you're going to think that cryptocurrency is going to move up. One little sweet thing that you can do, ladies and gentlemen, okay, is pull up Coinbase and pay attention to how Coinbase moves alongside Bitcoin. So check this out. If I pull up Bitcoin, obviously there's going to be a different price point for Bitcoin because Bitcoin trades continuously and, of course, Coinbase doesn't trade continuously. You can see that it's sort of moving in the same narrative, all right? And this is on the daily time frame. We zoom out and we can see that there is a similarity between Coinbase and Bitcoin's price, okay? You can see that right there. It's literally marrying up perfectly, all right? So it might pay you to actually get invested, or should I say, have an interest in what's going on with Coinbase in the stock market. Check this out. Are you with me so far, ladies and gentlemen? Look at this. Right. Some of you might see it, some of you might not. Let me just pull this here, okay? To the left of the screen, you can see right here, this is important. There is, from September 2022, 827 funds held Coinbase stock. And you can see it went down to 815, went up to 855, and this quarter it's gone down to 837. Earnings per share for Coinbase ain't looking too promising because they've got this SEC gunning for them and all sorts of jazz that is happening in the cryptocurrency space, all right? But you can see all these other companies inside of this group, okay? They are sort of okay, nothing great. I mean, we got Fair Isaac, where is it? Fair Isaac, there we go. Company similar to what Coinbase does. It's got a market cap of 22 billion. It's currently trading at $896 a share. Same industry sector, okay? Computer, software, financial, because that's what Coinbase is. It's just a computer software that allows people to trade cryptocurrency, buy cryptocurrency, and they earn off the fees. That's why Brian Armstrong is trying his hardest to get an exchange listed somewhere else so that he can continue with those provisions. But this is my point I'm trying to say. The fund ownership is going to be important because people are actively buying and selling this stock. If you look on the day-to-day basis, you can see that we have got average daily volume for Coinbase is roughly around 14 million shares exchanged per day, okay? Now, at the current price point that we've got, which is $77, there's a lot of exchanges happening, okay? But more importantly, what I'm trying to convey to you all is this. Based on the way Coinbase is behaving in the stock market and the pressures that it might be getting, okay? Focusing on how many funds are actively trading it. If we see in the next quarter that this reading has dropped and it goes down to like 757 funds holding onto Coinbase, then we know that they're getting rid of the stock. That's usually going to mean prices are going down. That's usually going to show in cryptocurrency. Why? Because people that are invested in cryptocurrency may not be touching the stock market. They hear about Coinbase, they say, fuck it, it's FUD, all right? But they see Coinbase actually dropping, then they see Bitcoin dropping as well, because the people are associated to cryptocurrency think Coinbase is going to be the main player. It's the base, it's the beginning, the start, the foundation, the orthodox in the crypto space. In principle, whatever Coinbase is doing, Bitcoin's going to do. That's the truth. And quite frankly, there's more volume, in my opinion, just in this single stock than there is being exchanged in Bitcoin. Think about it. Now, statistically, I know that's a little bit wrong, but what I'm saying to you, there are more players, bigger players with bigger cash moving Coinbase up and down than there is in Bitcoin. Because it's retail right now. That's the issue. Retail's the one. This Tao, man. Retail is the one that's going to be impressionable. So keep an eye out on Coinbase. Whatever Coinbase is doing, it's probably going to be shown in Bitcoin. Okay? Are we all on the same page, ladies and gentlemen? Are we good? Yay, nay? We're going to get into some price action right now. It's 25 minutes past. Let's have a look at where we are. Are we good? I've got this stupid fan. This fan right next to me, man, doesn't do anything. There's more pressure from my backside. No, I'm not saying that. I take that back. Forgive me. Anyway, let's get with the flavor. Where's our dearly beloved right here? Cool. So, Bookmap. What do we have on Bookmap? So yesterday, we saw a little bit of a trickery by the market maker. And why I said to you guys that zone down below was very important. Seeing the same thing again. Zoom out. What do we have? Bitcoin tries to make it above the VWAP for the session, down at the lows right there at 25,720-ish. Zooming out, we are seeing that liquidity is sort of drying up. We got this big order at 558 Bitcoin orders at 26,280. The market will be opening very shortly. Remember, the market is going to be reacting to the news that's happened from the weekend of Friday's close. And then, of course, the Labor Day. They're going to be scurrying to their charts. They've got orders to be filled. Clients are calling up saying, get rid of that stupid stock. I don't want it. That's what's going to be happening in the next few moments. Zooming out, we can see that we've got an order on Bitcoin of 1,148 Bitcoin orders at 25K. It remains static. What do I mean by that? Well, I haven't seen them cancel it in what? In the past 4 days, nearly. So this order has been placed continuously and remained in the chart. So 25K seems to be like a point where price could magnetize towards. Does that mean you simply just go short on that? Well, no. Before Bitcoin goes down, it needs to move up. We know that's going to be the case. We need to be very careful. If 25K is the point where Bitcoin is likely to end up, all right? And given that volume is light across the board in cryptocurrency, even trading volume with Bitcoin, we have to understand where we are really going to see the liquidity. Two ways you can look at it. You can look at it from a visible volume profile range, and you can take the concept of volume profile and say that the only interesting points in the chart for me are, of course, these high volume nodes, okay? These are nodes. These are where volume is at its highest. Whether it's buyers or sellers, it's a different story. We'll be looking at the actual exo charts in a second for that. Okay, now you can see there's a bag of interest in here. This point right here, guys, there are so many people holding on to it. All right, no way can Bitcoin go lower. No way can Bitcoin break this 16K zone. No way, no way, no way. Well, the market has a little bit of a situation. It doesn't care what you think. You can say whatever you like about cryptocurrency. You can hold on to dear life for it, engage in diamond hands. But the truth of the fact is this: the market will do whatever it needs to do. We are, in essence, fooling ourselves in the belief. And listen, I'm not saying this to try and scaremonger anyone into get rid of anything. Okay? If you're just blindsided by only buying cryptocurrency and you were blindsided by it when it went to 64,000, you're going to be scratching your balls thinking, what am I going to do now? I'm at 25K and I brought it 65. That boat is gone for the time being. You have to look at both perspectives. Okay? The NASDAQ is up 30%. That means that's 30% value in stock. Someone's going to get paid on that. They are giving us information to make us believe, yes, things are good. That's only going to make you hold on to your assets. We've got a problem with the yields, ladies and gentlemen. And as long as the yields are trading in these stupid inverted areas, we are going to have a problem looking optimistic about the economy in the future. We ain't even got interest rates dropping yet, guys. And this is what the Fed's problem is. They're trying to slow down the impact that interest rates have. You go back to the idea of Coinbase. Where is it? Let me show you. Yeah, I'm talking about Coinbase. But look at their debt. Corporate refinancing is going to screw Coinbase. That's why they're rushing about trying to find another way to create an opportunity for people to trade overseas, whatever, because they got to refinance that 62%. They may have picked up these loans back when the interest rates were really, really low. And that's what the problem has been for a lot of landlords as well. They picked up mortgages for next to nothing. Interest rates are climbing up to 5.25%. And now they're going to have a look on their statement. Your mortgage payment now on a collection of around, say, 5-10 houses, your mortgage payments are now up nearly $2,500. Okay, that's a fucking landlord, ladies and gentlemen. What do you think Coinbase is going to be saying? Even worse. I don't even know what's going on here, right? But just check this bad boy out. Look at this. Wait there. Look at Amazon. Where is it? Come on. Amazon. Give me Amazon. Here we go. 96%, bro. What's this guy doing? 96%. That is sort of a stigma. That's why it's only $138 a share. But look at the volume. Every day, 52 million shares are exchanged. Okay? Is that why it's priced at the price that it's at? Is it because investors are like, oh, you know what? Shit, man. Excuse me. Is that because investors are like, come on, man, 96%? Earnings per share, $3? 96%. Yeah, Jeff, what you doing, brother? That's an alarm bell. And only banks hold 1% of the stock, 38% of funds. And we can see that funds have actually increased from 6,622 all the way through to 6,792. It's like a cheap place of value, storehouse of value. $138 a share, that's nuts. That is absolutely nuts, you know? So, again, yields, it's a problem. As long as the 2-year earns you more money than the 10-year bond, okay, the yield, that's an issue. And we've just had an open and there's a gap up in the actual bonds themselves, if I'm correct. No, hopefully not. That's a bad sign. Dollar, where's dollar at? Come on, let's get this market going. Here we go. Market has now opened. Dollar is starting to come back down. Where's Bitcoin at? Let's have a look at our range for Bitcoin. Bitcoin's starting to choose some very interesting zones right now. Let's have a look. Okay, here we go. All right, green vector candle right there, if I'm correct. Yeah, there should be a vector. Yep, there's a vector candle. Rejection of the daily open. Cool. There's a strategy for you. Focus on the daily open. If Bitcoin hasn't tested the daily open in a little while since the last time it tested it, then you're going to be assuming that it's going to try and make its way towards testing that if the EMAs are edged upwards. But it's more than just EMAs and you know, moving averages, daily opens, and all of that stuff. We've got to have an idea about where the liquidity could be. You've got to ask yourself, and this is what I say to members of the channel, You've got to say to yourself, where would the retail trader buy? He needs a reason to step in. You know, he ain't going to get in on some secret information that he might have from the marketplace. No, he's like, fuck, Bitcoin's moving up, bro. Let's go. He's marked price up and rejected the daily open. Why? What on this chart? Tell me. Show me on this chart where you can go back in time and see that every time they've gone to the daily open, they've aggressively done something at that point. Look at this. Stopping volume candle, green vector, can't clear above the 200 EMA. That's a sign you run shorts. You never run shorts when price is dropping. You don't. You go long when price drops. You go short when price rises. That's why. Because market maker is doing that business. We know market makers exist. You know, Wintermute, liquidity provision. Look at that. Awesome. Yeah? That's my new market maker logo right there. Look at that bad boy, pixelated, taking the piss. But these guys are the machine behind why someone buys and why someone sells. Now, what have we got? Check this out. If market makers, in principle, buy this article right here, okay? Stick with me on this one, whether you like to hear it or not. This is the facts, all right? I'm giving you my opinion on something, all right? Whether it's true or not doesn't matter, but at least you've got it in your mind where you're not blindsided by Bitcoin to 100K. I'm always going to be favoring Bitcoin to go higher. It needs to go higher, in my opinion. But I'm trying to get you to be critical about why you cannot just be fooled by the idea. Do not fall in love with the idea of Bitcoin being a price point that will be good for you. Nah, that's not how investment works. Then we wouldn't be diversifying portfolios if that's the case. We just buy one stock and think, fuck it, deal with it, done. We are finished. I'm done with that stock. I will stay with that stock. What? They're bankrupt? I'm staying with that stock. What? The company doesn't exist anymore? They closed up the shop. They burnt the building. Give me more of that stock. You can't think like that. If crypto market makers' profit margins are sinking, that means they're going to probably gun for areas of liquidity that they have previously left behind. Stick with me. 3-month chart is showing us some very interesting pools of liquidity. Remember, market makers are providing a service to the likes of Binance. And we have a nice collection of liquidity, like we spoke about yesterday. And there are $100 billion worth of liquidity in this area. If these guys ain't making money and they're down, where do you think they're going to go? Just off that logic itself, it only makes sense, doesn't it? You got nearly $150 billion worth of traders' margins sat right there. No, leave it. Bitcoin, 4-year cycle, the rainbow. They said it. It's going up. Fuck it. Leave it there. We want Bitcoin up. They don't care. That's the sad truth. They don't care. Now, you might be thinking, hold on a sec, Tino, man. You're coming across a little bit like fucked up now. You're being very aggressive and all that stuff. No, I'm trying to get you to be critical. You're putting your money into this bad boy, okay? You're taking the risk. You've got to be at peace with it, but do not be married to the idea. At some point, Bitcoin will go to 100K. At some point, it will. But we're talking about now. Where we at right now? How can we solidify the idea of it going that way? Well, we can just look at price action, fine. We can go onto the Bookmap and we can look, where are the orders being filled? As each day passes, you're going to start to get to the consensus of, yeah, maybe Bitcoin could be moving up, but we have a little bit of a problem on higher time frames. Looks like they're gunning for areas where they can grab people's interest, because right now people are holding out in this zone. There's those who are going up. There are guys that are favoring to go down. We're waiting for the market to fill its bag. We're waiting. They are loading up in this position. Some of you conventional traders or the retail traders who are looking for certain patterns and structures and all of this stuff, they are waiting for them to come into action, okay? That's what goes off in these zones. It's all psychological. But where's the money? The money's down here. Now, if they really are going to move Bitcoin back up, we need to clear this 25,000 zone and get the hell away from it. The only one conviction that we could have had was when they declared this ETF grayscale story, but they just brought it back down again. Bitcoin has to hold this range, because if it does break beyond the 25,100 zone, it's done. They're only going to go for the next pool of liquidity down below, and then we'll be having the same conversation again. Will Bitcoin hold out in that zone? So we see a drop down, then it'll be doing this stuff again. Look, all of this. And then the same bout of orders will be coming in. And then they'll be building up the tension. Some more news will be coming out. Good news for crypto, bad news for cryptocurrency. Like, you're not going to press this button without a reason. Do you understand? You know, ETF is the only way that Bitcoin can go up, because it gives us access to $15 trillion worth of mullah. That gives us access to John, sat in the Bahamas, scratching his head, wondering where he's going to put his money. He's got a $700 cigar in his hand, and he's got his missus walking on the sands, and he's looking at her, and he's saying to himself, I've got another $2 million in my portfolio in cash. What can I do? He calls up Steve, his best mate. He says, yo, man, what's the story? I've got $2 million sat in a pocket and I'm not doing anything with it. What you got for me? Well, we've got this ETF. What's that? Okay, I know I've got hold a couple of ETFs. Where are we at with those? Oh, you're up 3% on those ETFs. Oh, okay, cool. So what's this new ETF? It's Bitcoin. Oh, I've heard about this Bitcoin. All right, then what's it priced at? He gives him the price. He goes, oh, you know what? Chop me a few thousand shares on that bad boy. At least the 2 million's doing something. All right, cool, man. There you go. Bang. That is cryptocurrency adoption right there. Because he's already associated himself with the ETF. That's what cryptocurrency needs. Ain't no cycle. Sorry. If Bitcoin has its own cycle, why are we looking at NASDAQ and S&P? Bitcoin should be shooting up. But it's following the macro data. Why? Because new money ain't hitting cryptocurrency. All right? Now, you want to learn more about the hybrid system, go check out the new website, guys. I've got a couple of things happening on there. Check this out. New website. Looking lovely, okay? More importantly, there are 2 courses that you can take on the hybrid system, all right? You can take a free one, or you can take a paid one, and that's really for the guys who are scalping. I've been requested to do a swing trading one, so I'm going to be working behind the scenes to get that done, okay? Go check out Breaking Down the Hybrid System. It will serve you because it's going to give you insight into what is going on when I'm talking about the vector candle recoveries, the market makers. There's a whole section on who these guys are, the titans of finance, ladies and gentlemen. I hope I haven't chewed your ear off, guys. I've got to go have a shower. Mad love and respect. And I'll be checking in with you tomorrow. Peace.